Good afternoon, dear colleagues. Good afternoon, dear friends. We have been waiting for long for such an event as Finnopolis to take place because it has been delayed several times because of the pandemic. But finally, we now are able to get together and discuss all of the vital issues about technologies that are taking place in the financial market. And today's panel is about the coming of a retail investor into the securities market, the exchanges. And I would like to begin by introducing a panel of very esteemed speakers who are gathered here today as well as connected remotely. And let me begin. Oleg Vyugin, chairman of the Council of Trustees of the Moscow Exchange. Oleg Vyacheslavovic has a great number of other very respectable titles and regalia, and I'm very happy to see him joining us. Natalia Smirnova, the investment advisor, number 124 in the single register, the member of the Investor Protection Council at the Central Bank, and the online school for financial literacy blogger. Thank you for coming, because quite often when we talk about various issues, we strongly rely upon the professional industry, and we need to hear the voice of investors and consumers, and I'm sure that what is you are going to represent. Stanislav Bliznyuk, chairman of the management board of Tinkoff and the member of the board of directors, one of the most dynamically developing banks. As our colleagues are saying, they're no longer a bank, they are an IT company, and even more than that. So it will be really exciting to hear. Stanislav, connected to us remotely are Vladimir Potapov, the head of the VTB Capital Investments, the senior VP for VTB Bank. Vladimir has been very active for quite some time in promoting and developing retail sector in the financial market. A great number of introduced technologies innovation. VTB Capital is what he is standing behind, and so that is what he'll be telling us about. And Ivan Chebeskov, director for the Financial Policy Department of the Ministry of Finance of Russia. Ivan oversees a great number of regulatory innovations, everything that today, within the context of regulation of new practice and best practices, passes through his department, so it will be a great joy to talk to him as well. But let me not distract your attention anymore, dear friends. You know that over the past few years, we have been observing a big inflow of retail into the stock market, non-qualified investors, just simple individuals arrived at the securities market, and today they are acquiring buying the kind of financial instruments which just several years ago, it's not that they couldn't afford them, they couldn't even think about them, while today they are bona fide participants of the financial markets. And when, back in our days, we tried to achieve by this particular period the figure of about 5-6 million investors, it seemed to us to be overly optimistic, but today we see that the brokerage accounts have been opened by about 17 million customers, and respectively there is a multitude of individuals who are having shares in the various share funds and participate in various So I would like to begin with you, Oleg. How do you see this? Who's coming to the exchanges? What these people want? And to what extent they may be considered as a serious development driver? Thank you, Vladimir Nikolaevich. Principally speaking, let me welcome all of the listeners, all of the participants. Effectively, looking at the statistics, the Russian retail investor is a very well-balanced one. There is such information that the yield of about 3 to 5% is what half of all such retail investors expect, and just a little number, I think about 17%, are being quite bearish and are looking at it at more than 10% level, which means that the people who have come to this market are not behaving as absolutely illiterate. They want to earn a lot, simply expecting the market to do it for them. This is indirect statistics, but nevertheless that shows that the approach that they demonstrate is quite balanced. But of course, to my mind, retail investors are not comprehending the risks of the retail market in full, because this en masse inflow, which is about 26.5 million brokerage accounts and 16 million of, individuals, not accounts, and 2.6 million people who are being active. The ones who transact monthly, they have come in a very opportune period of time when, because of a whole series of factors that we're very well aware of, this is accessibility, digital technologies which offered a very easy access and sensible access to the stock market instruments, then deposit rates declining, which meant that a certain yield was there and people were looking for that. And so this emergence took place in a very opportune period, in terms of the nearest next year of the yield growth. And of course, whenever I see that my neighbor, my next door, is earning 10% per annum from his investments, while my deposit gives me 4%, of course you start thinking, shouldn't I do the same? Particularly, that is not so difficult to do. But I must be honest, every period of such market growth ends with a fall. That's inevitable. It's a correction. And so currently our retail investors will have to experience this thing. And so, effectively, I did a bit of a rough kind of analysis. If you look at the Russian citizens who invested in the beginning of this year into securities and bonds and stocks, no matter by foreign issues, most probably towards the end of this year they will lose, and that is what you need to understand. There will be losses. Of course, we understand that this is just accounting, the paper kind of losses, but that means freezing liquidity. Now, those of them who invested into the Russian papers may possibly gain a little, but again, this most probably will lead to the kind of expectations that they had not coming true. And that is going to be their first trial, for the Russian retail investor, who, as I tried to underscore, they're behaving themselves quite rationally, despite the fact that the financial literacy that we're always talking about continues to remain yet the task to achieve. But I must underscore that you must understand quite well who are we talking about. These are the people with not a sizable check. Because even before this hype, as is a fashionable way to describe it, there used to be high net, ultra high nets, people with a decent amount of money who were present in that market. They were investing, they remained there. But the important new thing that happened, that a lot of people came with a small check, and that is who I'm talking about. But as far as the ultra-high net worth individuals are concerned, everything's okay, because they understand the risks very well. They have more information to them about their investments and generally about the market, and this is who we may not really take care of. Well, of course, we should take care of them as customers, but just as regulators, as somebody who is really trying to care for the securities market, and you can stay relaxed. That's a bit of a description. All right, thank you very much. I heard a few things. So, en masse emergence took place during the growth period. Nobody felt any shock. Second thing. Third point, possibly the investment horizon hasn't been estimated ideally. Maybe the annual one is not what such an investor should peg himself to, particularly, like you said, an investor with a small check, which is the kind of investor who may need liquidity for something else entirely. With that in mind, a question to you. Is it true? Quite a lot of consumers, they relate to you, and in your blog, they may seek your advice as an investment advisor. How important it is to explain all these things, as they say, that the winter is coming, that the shock is imminent, and you need to be ready for that. And the second thing, that an investment may may get protracted. I mean, 3 months, 6 months, even 12 months may not be enough. And, respectively, to what extent one should act conservatively while investing, maybe save on a classic banking deposit, or, go for the least volatile financial instruments, please. Well, look, it is true. If you read the comments under my clips or wherever I speak, the recent 18 months, the most hypish kind of request. What am I to buy in order to, see it grow in a guaranteed way, without any risk, of course, because you don't have even to mention it. And the average statistical person who asks this question invests for 2-3 months. There is no stashed money, and for the investment horizon 1 year, and then we will see. And what is he going to see in a year's time? Nobody knows. And this person's portfolio, is concocted from all kinds of investment ideas. And people come to me and they are crying, I took Alibaba, Tal Education, a whole bunch of everything. And when I ask them, and did you take a look at the net debt to EBITDA? They think that I'm really sounding obscene, because people don't understand what they're taking. I mean, in terms of basic things, complete lack of understanding. Some are telling me, I went in for the IPO of a company, and what does it do? What does it do? I don't really remember. It could be pharmaceuticals or fintech. Excuse me, this is a big difference. So nowadays, I can't describe them as investors. I would describe them as, small-time gamblers. The casinos have been prohibited, and so they need to speculate something and really make a quick buck. And when I'm telling them that you need to diversify yourself in between different countries, you need to diversify yourself in between different industries, and they should be not more than one company in the industry. They take me, they're looking at me as a nerd. And so, what are they telling me? What I'm saying that you need to start investing when you've got some money stashed away and you've got your risks covered, and basically the investment cycle is 3 years minimum. And if you read about liquidity, 25 years it took the market to recover. They're telling me it's not interesting. I will look at what forums are saying. I will talk to normal bloggers who are going to tell me what I need to invest into, and then there will be some sort of an incoherent portfolio. So these kind of people is who I would recommend to first stash some money away, and then take some exchange funds, diversification. If you want to game, take 10% of your portfolio and just enjoy it. All right, and next I would like to speak to the colleagues who are financial intermediaries themselves and are helping the men in the streets to either save or invest. And it may seem that they are largely interested in only having a customer come and buy, and whatever happens then they don't care. But speaking to Vladimir and Stanislav on more than one occasion, I definitely know that this is a long-term strategy for them, and what's important is for a customer who comes not to get disappointed, for his level of trust to only grow, and so for these people to come for long. Now, bearing in mind the start of this conversation, Stanislav, can you tell us, what do you think about retail investors? What are these people are being guided by, and how, you incentivize these people, and on the other hand, how do you safeguard them? Good afternoon. Well, we're a young player in this market. I think that over the past 5 years, this profile of a retail investor has really evolved strongly. Whereas 5 years ago, there used to be less than 1 million. Usually, these would be professional players, particularly gendered, like male and 50+. Nowadays, this cross-section really is different, because we see a lot of young people coming, 25, 35, active women as investors, and they enjoy this product. And again, as it seems to me, we came up with a bit of a product disruption when we offered the kind of a product where, through one click you can get an instrument, and that application is going to be, done not in a day or two, but right there and there, online, and people really see it, and they start really actively using this instrument. And again, I agree that the average check went down, because previously those used to be ultra-high net worth, but currently we see the street retailers coming, and even looking at our representation, that would be about 60% of customers, their portfolio is half or 75% of their payroll. So this is a little kind of a ticket that they are trying to use in order to gain some experience. I not very much agree to the statement that everybody's trying to make quick buck and, ride the hype. Of course, people enjoy getting quick money, but looking at our data, about 85% of our customers, they adhere to buy and hold strategy, meaning to say that they buy and stay with it. So thanks for commenting in such a way as that we are not running after the idea for them to get into what we're offering, then to get our commission, and then whatever happens to them, we don't care. No, that is not the case. We're looking at it as an aggregate, comprehensive kind of a product. For example, we have a customer, Tinkoff. Tinkoff has an account in a Tinkoff Black, and this is just for an everyday spending. There's also a certain term account for some future plans, and there is a broad line of deposit funds, bonds, shares, and the customers need to learn to understand these products. And so our task is to provide such products to the customers to raise their awareness and give them learnings and achieve diversification. I mean, 10% for high-paying, okay, but apart from that, you need to distribute your money into more conservative instruments and achieve diversification, both in instruments and currencies and sectors and countries. And we are pushing our customers a little bit towards it, because small checks and convenient products, I think that these customers are very fast in terms of taking up on this learning, and that would be very different in a year or two. In a year or two, there's going to be quite mature and experienced investors who, in terms of portfolio diversification, would understand the notion and would adhere to it, and our job will be to give them more instruments, more advices. A additional micro question, Natalia said, and that was quite a common point of view, about the fact that it would be good to start with some sort of a passive collective investment, because the brokerage, for tomorrow, and we support this point of view in a way, but what's your take on this? Well, again, we are for offering whatever we are able to offer most, because we invest into financial textbooks and advisors and blogs. And as far as this is concerned, you learn from mistakes. You should rather try a little bit and feel the instrument, feel the tool, and then you will be much wiser, for the next round of investments. Well, so far your story is quite positive. To use a small check and try it in little ways, that is a bit of a micro money, but okay, we will get back to that topic. Vladimir? Yes, I'm asking you. You heard my questions, haven't you? Yes, thank you, Vadim Viktorovich. Thank you, dear colleagues. Well, look, first of all, what is it that I want to say about this whole theme? It seems to me that the accessibility of investment, this is what really has happened. In the first place, this is a way out towards a rationalization. Investing is a rational thing to do. And I believe that we're all telling each other about the Americans as a raw example, as everything is being so good there in terms of their welfare, and 87% and in the mature economies in the savings basket is represented by investment products. And so whatever is happening now, and actually thanks very much to the central bank for the statistics, because it has really sobered us up from multiple digit growth into the double digit growth, which previously was showing the rated securities and unrated ones. So 17% of savings, which was the raw statistics in the market tools, and about the additional 29 non-quoted tools. So 45% in Russia, on average in Russia, if you take a look at the overall basket, is represented by securities. So actually we're not so far away from the mature markets. I mean, if we act on the basis that they're more rational because they have a more in-depth experience, and although through the alteration of the basket profile while in terms of the quoted in favor of unquoted papers. Whenever there is an IPO boom, that is something that covers that gap, and most of the unquoted or unrated investments, I don't know, from Ozone to Vkusville, in terms of the placement, that turns this package from an unrated one into a rated one. And therefore, my look at this is that we are going through the rationalization of savings. Will be honest, I do not see that the younger generation, how shall I put it, is, running head over heels into this because the basic investors are 40 years on average, males. So the average Czech who started saving more through investments, I don't know, is not really going down. So we had the average Czech 2 million in the company, and the number of investments are 4 times less 4 years ago. So that is exactly the number that remains, but we've got 4 times more in terms of the funded accounts. So our question in terms of what the under-25s should begin, should it be the brokerage services, collective security or investment advisory? Let them begin with something. Because once again, they're simply making their first steps into rational saving. And I do not believe that they would burn themselves a little bit with one security. Their interest towards rational savings will completely alter, because once again, my thinking is that investing, there are life hacks and there are things that will stay for you forever. And so the topic that was titled about the hot assets or trendy sneakers, whatever I see happening right now, we see this crazy booming durable goods demand and inflation flowing out of it, but at the same time horrible decline in services. And so investments is exactly the kind of a service which slightly compensates for substitutes certain parts of from other services that we used to spend more time on previously. So my position is that this trend somehow will sustain, and the intermediaries should act in a very cautious way, because we're going through a transformative period. And so in this sense, the ESG topic becomes very important, because, you see, I'm the old millennial generation. I grew in 1990s. In 1998, I went to study in university. If you ask me from my childhood what kind of phrase was best describing my being. So my being was to earn money. So the 25-year-olds who are coming right now, they're very creative, they're young and energetic. Then they came the generation that really enjoyed spending. That was the first thing for them. But those who came after them, they have a different mindset. And if we, through investing, through ESG, can put in more sense, that will become the most important contribution into the development of the young generation. So, in conclusion, Vladimir, my answer to your question, yes, we do see this inflow. We do see rational behavior, which is rational on the systemic side of it as well as on the spontaneous side of it. We don't see any extreme risks. If you take a look at the basket in Russia, the average investor will show that the share of conservative instruments accounts for about 50%. We don't see any percentage increase of leverage compared to the millions that Stanislav referred to. So I shall put it this way. In terms of the proportions, people are not really running, into high risk, and people also have become more globalized quite clearly because of the COVID globalization pandemics. That makes people to feel the effect of the global environment that they exist in. Yes, thank you very much. But in this case, let me pass another question to Ivan. It seems to me that the colleagues, both Stanislav and and Vladimir, what I heard was that the behavior is quite rational. This is one thing. Second thing is that you may take a small risk in terms of a little amount of money, as long as you can learn to take investment decisions of some sort. And it seems to me, and I'm doing this soft lead too, that the Minister of Finance and the central bank were a little bit more conservative in their assessment. And what Natalia said was a little bit closer to what we previously discussed than just being an utterly positive way that, that the bankers told us about. But nevertheless, recently there have been quite a number of legislative changes aimed at making the arrival of retail investor into the stock market to be a smooth process, both entry and exit from it. Ivan, a question to you. Does it seem to you that we, as the regulator, the Minister of Finance stands behind most of the legislative processes, have we created some sort of a basic foundation in order for the retail stock market investor to feel comfortable, or is there something else that needs to be done or fine-tuned? Maybe it's not about regulation, but it's about practices. Please.
Good afternoon, Vadim. Good afternoon, colleagues. I've heard you, and as far as I understand, we are underway towards greater rationality. We all understand. We made the same mistakes when we first went into investment. You have to acquire this taste for risk. For investment, you have to feel yourself how you lose money, and you have to learn to work with this feeling. So I believe that, regrettably, people will continue to make mistakes. Unfortunately, people will continue to lose money. And yes, market will go down, and there are going to be problems. That's inevitable. From the point of view of the government, we cannot simply idly stand by. We believe that we need to bring to a minimum the risks for our citizens, especially if, to any extent, these risks are brought about by bad faith behavior of any player at the market or any other situation that involves misleading the investor or something like that. We will have to intervene in these cases. As far as your question is concerned, we work together with the Central Bank of Russia. We've decided to elaborate a financial market development strategy until 2030. And this strategy is focused on financial markets. In general, our approach is laissez-faire. We only need to intervene when the interests of our citizens are impinged upon, when the market doesn't seem to be fully functional. Unfortunately, the invisible hand of the market is not always working properly. Sometimes the stronger players try to take advantage of this invisible hand, pressuring the weak ones. And capital markets, of course, need a greater influx of retail investors. As you've pointed out, the number of these retail investors amounts to more than 15 million. This presents huge opportunities for our country as a whole and for our economy in particular. As far as regulation goes, we have several principles we stick to. First, we should focus on not doing any harm to individuals. We need to help them embark on the right path. We should always nudge the professional participants of the market in the right direction. So, if there is this appetite for short-term gain, we need to create incentives for longer-term investment, for longer-term values, for a longer-term vision as a whole. I think colleagues have been speaking about that for quite some time. We are in the midst of gamification, as it were. So it turns into a game. And I've read something about that. There have been some polls made on the phone And, the special telephone lines for people with gaming addiction, gambling addiction, and sometimes there are increasingly numerous calls from people who suffer from this investment gambling addiction, and we need to prevent this addiction from developing, from happening. Of course, so far, just a handful of our citizens have run into this problem, but we've got to stem the tide to prevent this trend from developing. There's another trend. Natalia has spoken about that. We're trying to nudge the private investors towards more passive instruments, to longer-term instruments, and together with the banks, with the professional participants of the market, we've been talking about tax stimuli, through legislative stimuli. The President has given us the instruction to have a closer look at that and how we can go about it. And I think very soon we'll come up with new initiatives on stimulating longer-term investment so that we transition from short-termism to a longer-term vision. And the third principle, we have to nip in the bud any attempts at mis-selling. Mis-selling is not just bad faith behavior, because it deals a blow to the market as a whole. If anyone behaves badly in the longer-term perspective, this is going to have a huge impact on the market in general. And of course, there is the problem of financial fraud and financial market, and this is yet another avenue we pursue. We have joint legislative initiatives with the central bank. So far, these initiative is confined to the banking community. We're working on establishing a single window which will allow our law enforcement to work with the central bank and to acquire any data on accounts that might be used for fraudulent purposes. And, well, at least at this point of time, there are plans to block such accounts and to prevent fraudsters from using such methods. Thank you. To conclude, our first part of our discussion where we try to give an outline to the market, I've got just two short questions. First to Oleg and then to Natalia. To Oleg, the Moscow Stock Exchange has been investing into educational programs, into financial literacy programs and other aspects. I ask this question in response to what Stanislav has said. For the investor, are the efforts to establish a high-quality environment sufficient? Is it just sufficient to, launch different educational programs and to keep educating people, to keep raising their literacy? Or do we need to teach some instruments, some concrete practices? And do we need some administrative instruments? Just briefly, no doubt, we need regulatory restrictions. Because education is a very personal process. We cannot have a direct impact on the psychology, on the mindset of a person. We can provide them with high-quality information, with different cases, with the background. If the person is more interested, then they will benefit more from this educational process. Others will benefit less. So we need some restrictions. This distinction between qualified investors, non-qualified investors, the testing procedure, some restrictions on products they can have access to. I think this is necessary. Natalia, a question to you. When Ivan spoke, he mentioned mis-selling as well as fraudulent practices. So what do you think? If we look at this from this point of view, from this angle, is there a difference between an individual investment consultant and the investment consultant who works as a professional, as a broker, or for a broker? So in that sense, does an individual consultant enjoy greater protection? Or maybe the protection is greater, but the toolkit is more limited. So what do you think? There are different kinds of investment consultants. If you talk about an independent consultant or a company consultant, well, there is a difference instruments. Of course, an independent one, it's better, but in reality, of course, it's not all black and white. If you work for a company, you've got several performance indicators, you have to know how much you sell of this and that, otherwise you won't get a bonus, and everyone wants to get money, to make money. So KPIs will be there and you won't be able to be fully independent. But if the KPIs are great, then it's all right. Secondly, if the consultant is independent, nominally, it does not mean that he or she is truly, genuinely independent. They can have a contract, they can be motivated for selling something with a greater margin. But if you are from the registry, then they will have to disclose any information on the conflict of interest. Otherwise, they will be kicked off the registry, and that's why I decided to join the registry. I want to be as transparent, as independent as possible. I think this is the best way forward, and it's only natural that I say that. Yes, it's very good to know your motivation. It's important. Yes, Stanislav, you want to add something? Yes. An investment consultant is sort of a preacher, a teacher. They provide you with basic principles, and then it's up to the client to make a decision. From this point of view, this educational function the consultant performs is highly useful. There's no doubt about that. As for the need for regulation, it's treading on thin ice. You can regulate it so much, introduce as many restrictions, that it is going to be impossible to develop this sector. So what we advocate is to incentivize longer-term investment, and the client soon comes to realize that you won't be able to make a fortune in a day. And if you are hasty, you'll stand to lose. There is policy that regulates through restrictions, and also policy that regulates through creation. So if we try to create an environment that will motivate people to invest into longer-term instruments, if you create tax stimuli, it'll create a natural attraction for the investors. It's not short-termism. So you invest a ruble and you have a horizon of 3 to 5 years. And if we create the requisite infrastructure, the necessary environment, then it's going to educate the client and push them towards longer-term instruments. Yes, thank you. Now let's have a look at the technological side. On the one hand, you can sell it, on a case-by-case basis. On the other hand, there are technical solutions that will allow you to attract as many investors as possible. My first question will go to Stanislav. There are automatic advisors, robots. What do you think about them? You know that they are increasingly emerging to the foreground, occupying an increasingly important place in the market. So, not today, not tomorrow. Do you think they will come to replace salespeople in 5 years, for instance, when a person applies to you and the robot simply gives the answer to all of your questions in a few clicks? So what do you think? Will it work? And what about the architects of these advisors, those who design them? Do we need to have requirements, at least ethical requirements for them? I think there is some sense in thinking about that. That is a very good question. We've got this advisory service and we invest that, but an automatic advisor is just a teacher. And this robot, it provides you with advice in accordance with several principles. And if you comply with the principles, this is going to be a well-balanced portfolio. And of course, it's up to the person, to the client, to decide where to trim, where to add more, and how to form your portfolio. But we believe in these automatic advisors. But of course, the sums there won't be big, and this is a mass market. If the sum of investment is bigger, then of course consultants come into play. They understand better the risk the person, the client, is ready to assume. They understand better the lifestyle and also the opportunities and the possibilities. So we are not just playing for the mass market. Yes, we do have many services for the mass market. You know, you can join a special channel and follow a human consultant that provides anonymized advice. We also develop open API. Just recently, we've launched Tinkoff Private. So this is a consulting service for bigger investment sums, for better off clients. Now, your second question is trickier. So how much trust do we place in AI, and how do we regulate that? And, you know, this would entail a huge discussion. Thank you. Vladimir, could you also dwell a little bit on automatic advisors, and could you also add something on the standards and strategies? Because, you know, I thought that these standard strategies, pre-designed strategies, are meant for people with smaller sums for investment. But we see recently that there is a trend that it gets increasingly close to brokerage, not to trust management. But I think there's something there. Could you dispel the doubts that I have? Thank you. First, I would like to join my colleague, and I can testify to the fact that you can educate a person for however long you like, but it doesn't mean that you will get the requisite experience. You can go to the school or to the university, but this doesn't mean that you will acquire all the knowledge that is offered there. So I have my personal assessment. I think a person needs to spend around 3 years or so in this investment environment before you learn how to not to make big mistakes. So it's, you know, either choosing an advisor from Tinkoff, from VTB, from Natalia, from someone who is not going to mislead the client if you manage to find the right managing company. But anyway, even this search process takes time. As Warren Buffett used to say, investment takes a whole life. So, you know, it would be foolish to try to turn it upside down in a blink of an eye. It's a long process. And we say that all the time. So second, my colleague, you need to give investors time to adjust. Yes, I think we all support that. So give us some calm, some time. We are investors too, and we need time to adjust to this broader market, to be able to come up with a portfolio of investment tools on our own. Yes, let us not shift to other countries like Vietnam or some other place where it's worse than here. We need to give time and give a chance to find our way around. Secondly, as my colleague has pointed out, automatic advisors can be useful, but we should not confuse AI and robotic advisors. You know, we've got an AI strategy of our own, which we've recently launched, whereas artificial advisors, you know, there is still a human being behind that. Yes, it's standardized, but still. And usually, advisors do not have access to the data on the client, so they will never be able to replace a living person. the client will never share all information about their assets. So, if we had open API on all assets, if we had big data on the assets, on everything, even something that was not shared by the client, you can have some money hidden away in your kitchen garden, for instance, or in a jar somewhere. But if we had that information, it would be easier for the advisor, for the automatic advisor, to avoid mistakes that a human person can make. So far, we need to calibrate this asset allocation, the distribution of assets, something that is impossible for the automatic advisor to do simply in the absence of information. But if we change that, if people come to trust more the system, if we find a new approach to personal data, of course, robots will replace investment consultants, but it won't take 4 years, nor will it take 5 years. It'll take several decades. If I judge by the experience of 40-year-olds or something like myself, I can tell you that we won't put trust in a robot. Now, as for the generation of 20-year-olds, 25-year-olds, I don't know, maybe they can. They might. They are more open, they are more susceptible to transparency, but of course, not according to the Chinese scenario. But if 6 years ago someone asked me about the future of fintech, I think Apple said that the future would be app-less. Maybe there are not going to be any apps at all. Everything is going to be calculated for us in advance. You won't have need for investment consultants for any app. You'll wake up in the morning and you'll have, an arrangement of investment.
So as long as we lack data, we'll need people, because we use people as activators and as advanced asset allocators. And as we strive to protect everyone, let us not forget that nothing happens by itself, on its own. So let us be responsible when dealing with our client. Let us make AI technologies better. Let us create the concept of investment advisors. And I have great trust in them. I think independent investment advisors have great potential, and so do investment advisors that will work as part of larger structures. So this lengthy debate as to what to choose, a company or a broker. I manage both, and I can tell you, based on my experience, that this really is a false choice. Because when some say that management companies manage limited amount of assets, and this is why the market is not growing, well, just open Tinkoff's app and open apps of those asset management companies, and you'll see the difference. The difference is striking. And this is how people choose how to invest. One thing when people just, invest randomly after having read random comments on a forum, and quite a different thing is when they ask for professional advice, and they can ask advice from, their neighbor, from artificial intelligence, or from a professional broker. Most people need advice to wrap it up, and they will find advice. Time flies fast. You might think 50 minutes is a lot of time, but no, it's just enough to launch a discussion. So my final question to you, Ivan, and please be brief. I'm sure you could provide a generic answer. It is very likely that at some point the upward trend will end. I don't know when this will happen, but what do you think? Based on today's discussion, can we presume that the market will keep confident when the next shock hits us, and after this potential shock it will recover and build back better? I'm sure this is exactly what is going to happen, because I'm sure investors will have even more confidence and the market should more shocks occur, because we're improving management, and despite all the criticism, our regulatory approach is liberal. As we can see, on our market, investors have access to a large basket of financial instruments. We're adding foreign NTFs, which will be a challenge for management companies. So we're opening up our market to foreign competitors, and this is unique. You don't see that happening in any other financial market globally. So this will be a big stress test. I'm sure the market will develop, will attract more foreign issuers and foreign investors. At least we see that countries of the Eurasian Economic Union are very much interested. And in the next 10 years, I think we'll gradually be returning high net assets, as my colleagues call them, or rich individuals. They keep their savings in offshores. We're talking about hundreds of billions. We hope that this money will be coming back as the infrastructure develops. And this will help enforce the market and make it more stable. Well, now is a great moment to stop. I want to thank all participants of the session who took part in the active and interactive debate.
Еще большие свершения. Рынок, он на то и рынок, чтобы там были и победы, и поражения.
Единственное, хочется всем
пожелать и регуляторам, и участникам рынка, чтобы
sometimes we lose and sometimes we win. It's normal for a market, but my wish to all of you is to make sure that your customers, that are in the center of all your efforts, that they benefit, that they don't end up in the red. And even when volatility happens, you should be able to weather the storm. Thank you, colleagues, and all the best.